Hi, guys. It's Stock Curry. And the largest legal decision of my lifetime was just leaked. Essentially, what just happened is the Supreme Court has just voted to overturn abortion rights. That is, Roe v. Wade was just voted to be overturned. Let me know in the comments if you guys can hear me okay. Uh, Yeah. So, for those of you guys who are not Americans, let me kind of explain what's going on here. And then we're going to talk about how this actually affects the stock market. We also have to talk about some economic news that came out that points to us having quite possibly either the just as bad or worse of an economy as we had during the financial crisis. So not only do we get this, we also have some extremely bad economic news, which I'll get to in just a minute. But we got to talk about this first. So let me explain just how big this is. For those of you guys who are not US citizens, let me give you a real brief background. So Roe v. Wade was a landmark decision that the United States Supreme Court ruled back in 1973, about 50 years ago. Okay, let me just kind of explain what happened. So, prior to 1973, abortions in the United States were not legal. Now, a few states had written some laws to legalize abortions, and finally, in 1973, they were officially legalized in the United States. And this caused a lot of controversy. Some people complained about the Supreme Court basically using this decision to do what they called justice activism, basically, where Supreme Court justices were essentially writing law. And this has been a major issue between liberals and conservatives for the past 50 years. And it's been a fight. Now, to put this simply, liberals have believed that women have the right to choose what they do with their bodies. And they should have the right to have an abortion if they don't want to have a child. And this is good for planning. There's also some studies to show this has reduced crime. Now, conservatives have pointed to this, and they say that if you are killing an unborn child, that's murder, and it should not be allowed in the United States. So we have this a fight between liberals and conservatives. Now, what I want to point out is if this decision is overruled, and keep in mind that this is a leak, it's not official yet. The official announcement is supposed to be released sometime this week, possibly as early as Tuesday. Now, my wife used to work in politics, so she actually contacted the people she used to work with who are still in politics. And my wife says that this has been confirmed, this is true, and this is an actual decision that will be officially announced here in the next day or two. In addition to that, my wife thinks that this was possibly leaked by some liberal at the Supreme Court who is trying to get public opinion riled up to hopefully change the opinion of the Supreme Court before it's official. Now, I don't think that's possible. I don't think that's going to happen. But that's just a theory and why it was released. Anyway, all of this to say, this is literally going to change the United States as we know it. There's a lot of issues that go on here economically. Okay. And this is a stock channel. So we're going to talk about the economics and the how this affects the stock market. I don't want to get into the politics too much outside of the brief history I just gave you, but I am going to talk about how this affects the economy and the stock market. So economically, this has a number of wide effects. First of all, when the federal government makes a decision like this, essentially they're going to ban abortion, this is going to shut down a lot of industries. It's going to hurt, obviously, abortion clinics throughout the United States. Now, I don't know of any abortion clinics that are publicly traded, but still, this will have some economic impact. Also, this is going to affect any healthcare drug manufacturers that make the drugs that allow these abortions to take place. So what's going to end up happening is drug manufacturers, we might see those stocks go down on Tuesday as this decision comes out. So keep that in mind. Now, there is also an organization that is federally funded that provides abortions. It's called Planned Parenthood. And I don't know what's going to happen to that. I don't think their funding is going to go away, but this certainly changes, uh, what they're going to be able to do. It changes really a lot of their mission. Now, they say that their mission is not abortions, it's planning a family. But there's plenty of evidence to show all of their money comes basically from abortions. So this is going to change that organization. So we have a pretty big major economic impact that's going to affect mainly your healthcare stocks and especially your drug companies. But the political fallout from this is going to affect the stock market as well. Now, historically, in the United States, when a political decision comes out that is favorable to conservatives, the stock market typically goes up. And when a political decision comes out that is favorable to liberals, the stock market generally goes down. Now, uh, there's not a lot of economic proof to show that conservatives actually are better for the economy and liberals are worse for the economy or whatever. But this is just generally how the stock market reacts to these sorts of news. Now, what I want to point out is this is favorable to conservatives. And so we should expect the stock market to actually rise. So what I want to do real fast is take a look at the futures. And we're going to notice something interesting. The NASDAQ futures right now are up 0.46%. Now, I really want to point to this green candle right here. You see this massive amount of volume that occurred right here about 2 hours ago. And that green candle, as you see this massive green candle here, that is what happened when this decision was leaked, okay? So this decision was leaked right about 2 hours ago, and we had a lot of volume on the futures. And notice the direction. It was green, massively green. So as expected, because this is favorable to conservatives, the stock market is actually reacting favorably to this news. Okay. Now, that's the extreme short-term reaction from the stock market. Keep in mind, though, that the stock market does not like uncertainty. It hates uncertainty. So depending upon what happens over the next few days, this could have a significant downward effect on the stock market. We're going to have to watch out for this. Now, over the past couple of years, what we have seen is when there are major political issues that rile up either liberals or conservatives, it usually results in protest, and unfortunately, it results in some people getting killed. We saw that a few years ago when conservatives stormed the U.S. Capitol, and quite a few people were killed in that. We also saw it about a year prior to that when liberals were upset in the BLM movements, and quite a few protests and riots occurred across the country, and quite a few people got killed in those as well. So unfortunately, liberals and conservatives are both equally to blame here. When there is a major issue that gets decided, something that really riles up either liberals or conservatives, it usually leads to some sort of protest or riots, and it usually leads to some people getting killed. So I know the Capitol is currently preparing for the possibility of this. We'll have to see what happens, but I do want to point out that in the short term, the stock market is reacting favorably, but over the next week, we could see the uncertainty cause a downturn in the stock market. Okay, that is the major news. Obviously, we can talk about the politics all day long, but this is not a political channel. I'm not going to get into that. I just want to point out what the economic and stock impacts of this decision will be in the short term. I have no idea. Nobody has any clue what this is going to do long term. This could really affect the elections come November. This probably is going to cause major volatility in the markets in October and November as we get closer to elections. I do think that's going to come a little bit down the road. But the problem with this news, normally this would have a major effect on the stock market. However, we have something even bigger economically that's happening this week that is overshadowing this major announcement. And that, of course, is the Fed. Now, the Fed meeting starts on Tuesday. It runs through Wednesday. Wednesday at 2 p.m., about 2 hours before the market closes, the Fed decision is going to come out as far as what they're doing. And then 30 minutes later at 2:30 p.m. Eastern time, Jerome Powell is going to speak. And that's when we're going to get a little bit of insight as far as why they made whatever decision they made and what they plan on doing in the future meetings. Keep in mind, we do have the May meeting this week. However, in just 5 weeks from now in June, we have another Fed meeting. So we're pretty much back-to-back Fed meetings here. Now, there are some concerns, some fears that the Fed is going to make a mistake that is going to essentially cause a recession. It's pretty much guaranteed at this point that we're going to enter a recession. The question is when and how big of a recession that will be. And we'll get into that in a second. And don't worry, guys, we'll get into your questions and everything here shortly. But this is something we really got to keep our eyes out for Tuesday and especially Wednesday. This is going to move the markets way more than this news is. So what I want to show you is something really, really bad. For those of you guys who don't know, prior to working for Merrill Lynch I started with Merrill Lynch in 2007. Prior to working for Merrill Lynch, I was the vice president of a subprime mortgage company. And what I saw take place then was literally caused the entire financial crisis in 2008 and 9. And yes, I am to blame for the financial crisis because I literally caused it with the subprime mortgages that I was putting people into in 2005 and 2006. So what I want to point to is this: the exact same thing that we saw in 2006 that caused the financial crisis in 2008 is happening today. And it scares the crap out of me. So let me explain what's going on. In 2006, we saw housing prices skyrocket and we saw mortgage interest rates go up as well. Now, mortgage rates started the year at 3.29%. And they hit a high of 5.55% on Monday. This is really important right here. The vast majority, that is 95% of the 100 largest U.S. housing markets, are now less affordable than their long-term rates. That's up from just 6% at the start of the pandemic. If rates were to rise just 50 basis points more, or if home prices were to increase just 5% more, home affordability would be the worst on record. Let me be clear. We are this close to home affordability being worse than 2006. Now, it gets worse. Let me show you this. This article from the Wall Street Journal. This is what absolutely scares the crap out of me. Home buyers are finding ways to take the sting out of rising mortgage rates. More borrowers are paying upfront fees. If you don't know what the upfront fees are, that essentially when you take out a mortgage, you can pay a certain amount of money upfront in order to lower your interest rate. Now that's fine. That's not what scares me. It's the next thing that scares me. And considering adjustable rate mortgages to lower their monthly payments. All right. If you guys don't know what an adjustable rate mortgage is, this is known as ARM or ARM in the mortgage industry. This is literally what caused the financial crisis in 2008. Let me explain. In 2005 and 2005, interest rates were starting to rise and housing prices were through the roof. And to put it mildly, people wanted to buy homes, but they couldn't afford those homes. So what they were doing is they were opening up these ARMs or adjustable rate mortgages. And look, I'm to blame. I put people into these things, okay? The belief in 2005 was this. You get into this adjustable rate mortgage, which essentially allows you to have a much lower mortgage payment now. The belief is that a year from now, the value in your home is going to rise and you are going to have enough equity built up in that home. You're going to be able to switch to a 30-year fixed mortgage at a lower interest rate. And you're going to get that lower interest rate because you're going to have more equity built up in the home. Basically, more than 80% equity. Your PMI will go away. Your mortgage rate will go down because it's a safer investment for the bank. That was the belief in 2005. In 2006, people were coming to me to refinance their houses, get out of these ARMs, and get into a 30-year fixed mortgage. Now, in the beginning of 2006, that was fine. We were doing it all day long. Refi. And then, about the middle of 2006, it ended. The entire mortgage industry dried up. And what ended up happening was this. We were no longer able to refinance people. We were not able to get them into those 30-year fixed mortgages. Now, as a business, as a subprime mortgage business, my job was over. It was done. The company was going to go out of business. We were done. We couldn't get people into mortgages anymore. And that's why I left and I quit and I went to go work for Merrill Lynch. Smartly, I went to go work in their securities lending department where we shorted stocks. Now, get into a little bit more of what this eventually cost. In 2006, people couldn't refinance their houses. Now, the housing prices continue to rise. So about starting in 2006, getting into 2007, well, starting in 2006, people were no longer able to afford their mortgages because what happens on an ARM or adjustable rate mortgage is 1 year after you get that mortgage, your mortgage rate is going to adjust and it's going to go up, usually by a lot, especially as the Fed continues to raise interest rates and sell mortgage-backed securities. Your interest rate goes up by a lot, which means your payment goes up by a lot as well. Now, when that happens, people are no longer able to afford their mortgages. They could barely afford the ARM when it first came out, and they definitely cannot afford it once it adjusts a year later. And sometimes they don't even adjust a year later. Depending upon how they're set up, they could adjust as little as 3 months later. Now, what ends up happening there is you can no longer afford the mortgage. So you just stop paying it because you can't afford it. And then about a year goes by and it's time to get foreclosed on your home. Now, the problem ends up being this. Housing prices have stopped going up. Because of higher mortgage rates and people buying less houses, the bubble bursts and housing prices now come down, which means a year later, as the foreclosures start to take place, people are now upside down in their mortgages, meaning they now owe more in their house than their house is actually worth. What does that lead to? It leads to people walking away. I mean, why pay a mortgage that you can't afford and a house that you owe more than it's worth on? It makes no sense. So people just walk away. And this leaves banks with thousands of houses that are now in foreclosure. This leads to massive declines in housing prices, and this leads to massive write-offs for banks, which causes earnings on banks to go down. And this all started around 2007. By 2008, banks were now underwater, losing more money than they were making. And some banks went out of business. Other banks had to be bailed out. We ended up with the worst financial crisis in recent memory. And what we are seeing here is that the exact same thing is happening. And we are literally inches away from this being worse than it was in 2008. Now, I do want to point out that where we are right now today is essentially where we were in 2006. The housing crisis didn't start until 2007, and it did not hit the stock market until 2008. So this nightmare is at least 2 years away from hitting the stock market. Now, a lot of people think we're going to enter a recession starting in late next year or early 2024. And if that lines up, it should line up perfectly with a major housing crisis leading to the worst recession we have seen since 2008 and possibly even a worse recession than 2008. Again, though, that's all long term. That's all 2 years from now. So, what I want to do is talk a little bit shorter term. What do we see coming up for the next week, the next couple of months? Now, guys, in the comments, please be respectful. Be respectful. If you guys are not being respectful to each other, I'm going to ban you. Be respectful, please. Okay. What I want to point out is this. There was one analyst. This was at a very small financial firm, but still, he says that a bubble is hitting 50% of the market, and he warns that the NASDAQ is going to drop by at least 50%. Now, my experience, if we go back and we look at what happened when the NASDAQ was extremely overvalued in late 1999 and 2000, and we look at the financial issues that are similar to what happened in 2008, and we look at how much the market came down, I think that this guy on the screen right now, I think he is being conservative. I think the market is going to drop by more than 50%. I think we're looking at anywhere from a 60 to 80% correction in the NASDAQ, but not yet. Okay, not yet. I think we're actually going to rally over the next couple of weeks. I don't think this major correction is going to start for another year or two. Okay, I actually think we're going to rally. So, what I want to show you is this. Bad news, of course. The 10-year Treasury yield tops 3% for the first time. This is really kind of expected. All this is really showing is that the market is expecting a major increase in interest rates. Okay. Now, let me go ahead and pull up the NASDAQ real fast and kind of show you guys what happened today. We're going to do a little bit of technical analysis for you guys. And then we're going to get into your questions because I know you got some. All right, well, I'm going to go look at the daily chart here. And what I want to point out is very, very important. So look very carefully at what I'm about to show you. Because if you guys can get this, you guys will understand what's about to happen. What I'm going to do real fast, I'm going to pull up the next Fed meeting and just show you guys the dates. Because I want to show you guys what happened in March. All right, we know the next meeting is May 3rd to 4th. But look at the last meeting. It was March 15th to the 16th. Now look very carefully at what happened in the stock market. All right. This was March 15th. March 16th was the day that the Fed actually announced their decision. And what happened was the market was expecting, was pricing in the Fed raising interest rates by 0.25% and basically stop buying bonds. That's what was priced in. And when the Fed came out on March 16th and announced that they were doing exactly what was priced in, we saw a massive rally in the stock market. In fact, one of the biggest 2-week rallies that we've ever seen. Now, that Fed decision, this was Wednesday, this was Tuesday, this was Monday. The market bottomed out on Monday. On Tuesday, it rose. And on Wednesday, that started the massive rally upward for the next 2 weeks. Okay. Right now, the market is pricing in a 50 basis point rate hike. That is 0.5%. The market is also pricing in the Fed announcing $95 billion a month of runoff on their bond assets, meaning they're going to stop buying bonds. They're going to allow them to expire at the rate of $95 billion a month. If the Fed comes out and announces that exact thing, 50 basis point rate hike and a $95 billion a month runoff on the bond assets, I think we are going to have a rally just like we saw back in March. I think Monday was the bottom. Well, kind of Friday. Monday was the bottom, okay? Because it was kind of the same amount. And I think we're going to see a rally for the next week or two. Okay. Now, look at this. Guys, I'm going to stress again, please be respectful in the comments. Okay. All right. What I want to point out is this. Take a look at what happened intraday. I'm going to pull up the 5-minute chart. No, I need to pull up SPY because it shows it a lot clearer than this. Hold on. SPY. Okay, 5-minute chart on SPY. Now, what ended up happening was we kind of came down here and we got this bounce, this major bounce here. It was essentially bouncing off of the 0% fib until it kind of dropped below it. And then it rallied and closed above the 0% fib, although still below this major resistance level. If we look at QQQ, it also closed just barely above the 0% fib. Again, just above a major support resistance level. So essentially, if we look at the markets technically, they are right on that borderline of bullish bearish, okay? But what happened today is as the markets dropped and as they started to rally up, we ended up selling. I'm going to pull up my Twitter here real fast and just kind of show you guys what I ended up doing today. I want to kind of show you. Where is it? Okay. So I ended up selling this QQQ put for a 54% profit. And then minutes later, I sold my SPY put for a 138% profit. By the way, guys, if you want to know everything I'm buying and selling, you can sign up for the VIP Discord. I post all these trades before they're filled. I'll let everybody know what I plan on doing. And the VIP Discord, just go to stockcurry.vip/VIP. Okay, stockcurry.vip/VIP. And I post everything that I'm going to buy and sell before I actually place the trades. So you guys can get in on these trades. If you guys want to make 138% profits, come join us. We're killing it in the VIP Discord. Guys, if you're in the chat right now, you're a VIP member, put some curries in there for me. Let me show you guys what trades I opened today and kind of where we're at profit-wise. Let me see if I can get these pulled up. So first up, I bought some AMC today. Bought it at $14.80. It closed at $15.20. So that one we are at, okay, 2.6% profit on that so far. I opened up a Facebook Bullish vertical put spread, or I sold it, and we're up 32% on that. I opened up a Microsoft Bullish vertical put spread. We're up 6% on that. Opened up a PayPal vertical bullish put spread. We're up 15% on that. Opened up a vertical bullish put spread on Qualcomm, QCOM. We're up 14% on that. I don't make money on everything. I opened up a QQQ call option. We're down 10% on that. And then we also opened up a SPY call option. We're up 1% on that. So let's see. We got 1, 2, 3, 4, 5, 6. So yeah, so 6 out of my 7 trades today were profitable. Guys, if you want to know everything that I'm buying and selling again, come join us over the VIP Discord. Like I said, 6 out of our 7 trades were profitable today. We're making money. You know, we're in it. We're trading this market. We're making money. So come join us over that VIP Discord. Thank you, Tim, for the curries. Love you. Yeah, that was, yes, that was Zip Trader U, guys. If you didn't know, I actually have a discount for Zip Trader U. If you guys want, I think it's 15% off. I have that over at stockcurry.vip. I'll pull that up for you guys real fast so you guys can kind of see that. I've got a 15% discount at Zip Trader U if you guys want to join it. You know, just try to help out other people. He has a great course, by the way. If you guys have never taken it, where is it? I don't know. I got it somewhere. Resources. Oh, there it is. I think. Trying to find it for you guys. No, where do I have it? I think I've got it over on this website. Training? Maybe? I'll find it for you guys. 1 second. Yeah. There we go. So there, let me type this in the chat for you guys real fast. If you guys want, was it 15% off Zip Trader U? I'll put this up here for you guys. Zip Trader U. Oops, 15% off. And that's at scottcurry.me/training. All right. So I'll put that up for you guys. There you go. All right. If you guys want 15% off Zip Trader U, you can go to scottcurry.me/training. Again, scottcurry.me/training. You get 15% off Zip Trader U. All right, guys. Let's talk about whatever you guys want to talk about. This is a lot. This is a lot. So let's get into your comments, and let me see what you guys are having to say, and we'll talk about whatever it is you guys want to talk about. Okay, AMC, really? Yes, really AMC. Let me guys show you why. AMC. Pull up the daily. I got to do the daily, otherwise it's not going to make sense. Okay, so here's the daily chart. And you guys see all these orange lines? These are support and resistance lines. Look at this. Look at all these bounces. Look at this, guys. Look at this. Bounce. Okay. This is extremely strong support on AMC. Extremely strong support. So yeah, I mean, I'm going to play this. Absolutely. I'm bought in. When it hit this right here, you guys can kind of see it. It hit it. You better believe I bought in. Yeah, I absolutely bought in right here because it always bounces. It always does. So yes, I bought AMC today. Let's see what else we got. Is the red box short squeeze over? I don't know, guys. You can never, ever predict these short squeezes. I have no idea if it's over or not. Great job on Zip Trader for pointing that one out. I have no idea. I don't like playing those short squeeze plays that much because you never, ever know. Okay. Let's see what else. All right. I'm going to do it. I'm going back to the beginning of your comments and we'll see what we got here. Yes, hot curry, but we don't want burned curry. I got sunburned. That was not good. Keep it hot, but let's not burn me. Let's see what else we got. Give me a minute. You guys have got a lot of comments here. Let's see. Okay. So, good point. So going back to the whole Roe v. Wade abortion being overturned. So this is interesting. If the United States overturns abortion, and there's two things they could do depending on what the final decision is. On one hand, they could say that abortion is illegal. You cannot do it. On the other hand, they could say abortion is no longer illegal. Now, it sounds like the same, but it's a massive difference in the United States. If abortion is illegal, then it's flat out illegal. No states are allowed to do it. If it's not legal, then that means every individual state is allowed to write their own laws and come up with whatever it is they want to come up with. So, yes, it depends upon how the final decision is written. It may or may not give the rights back to the states. But yeah, that is certainly something. And again, this is all like fallout. We have no idea what's actually going to happen. But yeah. Okay, let's see what else we got. No, I'm not a leftist. I'm not a rightist. I'm actually in the center. And this really confuses a lot of people. I generally piss off conservatives and liberals equally. So nope. I'm not. I have literally created posts and been called a libertard and a Trumpist in the same post. I tend to, I'm Gen X. You know, I'm the guy that sits in the corner and eats popcorn while the world falls apart. Let's see. What else we got here? More volatility? Yeah, absolutely. I mean, look, we've been a massive volatility since the beginning of the year. We are definitely going to see more volatility. I would not be surprised to see the VIX rise. However, like I said, over the next week or two, we should get a nice rebound in the market. So we'll see what happens. Let's see. All right, you got a lot of news here. Let's see. Got a lot of comments. I'm gonna go through your comments. Let's see what we got. Home buying videos. Yeah, I've actually got another channel that I want to get into more personal finance stuff on. I haven't really started it yet, but if you guys want to go subscribe and be the first to view that channel, it's going to be at youtube.com/real Scott Curry. Again, youtube.com/real Scott Curry. That's going to be the new YouTube channel where I'll get into more personal finance stuff. So yeah, let's see what else we got. Still looking through your comments here. Give me a minute. Will DWAC boom tomorrow? I don't know. That stock remains extremely overvalued. It is just massively run by retail. I have no idea what this thing's going to do. It might. Just politically, it might. I wouldn't be surprised to see a massive rally in DWAC tomorrow. Yeah, we'll see. I don't know. I see your thought process there. Yeah, it could. It could. Amazon. We'll talk about this guy. So, Amazon's got a problem right now. They're losing money. The forward PE ratio is 52. That is extremely high for a company whose revenue is going down. I'm going to say this. This is going to scare you, but I need to tell you the truth. We are in a bear market. Over the next 2 years, we could see Amazon fall by as much as 60% from here. I would not be surprised to see Amazon fall down to $1,000 a share in the next 2 years. I don't think it'll happen quickly. I think it'll happen slowly. And pull up the monthly chart here. I would not be surprised to see us get down to this support and resistance level right here. Just based upon the massive PE ratio. Let me zoom in. I want to draw this right. Got it. Based upon the massive PE ratio, the fact that we have major bearishness on the monthly chart, I would not be surprised to see Amazon fall down to this $1,000 support resistance level right here. It's not going to happen quickly. I think it'll take 2 years, but I could see it absolutely over the next 2 years falling down here and getting down to a PE ratio of around 20, based upon the fact that the revenue is going down. So short term, though, let's just talk about short term because long term and short term don't always line up. In the short term, we're oversold on the RSI. We have this hammer here. Now, this hammer candlestick is a reversal candlestick. However, it's a weak reversal candlestick. I think it's only affected like 55% of the time. So there is a small chance of Amazon rebounding and going up in the short term, possibly closing this gap here back up to around 27.20 over the next, say, maybe by the end of this week. So I give about a 55% chance of Amazon rebounding and closing the gap by the end of this week. So yeah, but long term, it's very bearish. All right, let's see. Tesla. Oh my gosh, we got to talk about Tesla, man. So that is not Tesla. That is Tree Island still. Tesla, TSLA. So very, 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 very similar thing to Amazon. Short term, this is pointing to wanting to rebound and go up. But long term, our PE ratio remains 73. And long term, I do think this is going to come down significantly. We take a look at the monthly chart. We just had a death cross on the MACD. And where will Tesla fall to? That is the big question. A lot of people think Tesla's going to fall down to 539. I think that could happen by the end of this year. If the bear market gets more extreme, I could see it falling down to this $390 level within, say, 2 years. But again, we would need we would need the housing crisis and the financial collapse and Asia to collapse. And I mean, it's all starting, but it's long term. So maybe 2 years from now, Tesla's trading at 380. Maybe by the end of the year, we're down to 540. Short term, though, over the next week or two, it's looking like it wants to rebound and go bullish. When are we turning bullish? All right, I pointed this out in the Discord to my VIP members today. I'll point it out to you guys too. If we look at the market technicals, they remain 99% bearish. However, if we look at history, going back to March, we'll look at the fact the candle closed above the 0% Fibonacci retracement level today. I am gambling. I'm going to just flat out say it. I'm gambling that we are at the bottom. I am literally trying to time the bottom of the market. I don't know. Everybody says you can't do it. I'm going to try. I am gambling that we're at the bottom of the market and we're getting a rebound for the next week or two, which is why I went 100% bullish today on all of my options and stocks. So that's my belief. I think we're at the bottom now and we're turning bullish now. And I think we're going to rally the rest of this week. On a roller coaster? Yep, definitely. We're on a roller coaster. Volatility remains high. Here's the interesting thing. I got to talk about gold, silver, stocking up for food, whatever. So here's the weird thing about all this is we are not seeing money move into gold. I don't know why we're just not. Let me see if I still have. Yeah, I do. Okay, let me minimize this real fast. And where's gold? Here we go. So let me pull up the gold futures, and I'm going to change this to a daily chart. Look what's happening to gold. Gold maxed out on March 8th, and it has been dropping ever since then. Money is not moving into safe havens like gold. Oh, wait, you guys can't really see this chart. Oh, 1 second. Let me move this. All right. There we go. So money is not moving into safe havens such as gold. And this is one of the major reasons why our stock, GLDG, is going down. It's because gold is going down. Okay, it's not the fault of GLDG. It's the fact that gold itself is going down. Now, why is gold dropping? I honestly don't know. Part of it could be the fact that we just had a major run up and people are getting out of it. But normally, when we see the stock market fall and the bond market fall, people are jumping into gold as a safe haven asset, and it's just not happening right now. So maybe this is a buying opportunity on gold. Maybe this is a massive buying opportunity. And we're about to see a major rebound in gold, and we're about to see it skyrocket. Maybe. I honestly have no idea why people are not jumping into gold right now. Normally, when the bond market and the stock market sells off, gold rises. It's just not happening this time, and I don't know why. Possibly because the economy is still strong. I don't know. But there's a very good chance that we are going to see this jump massively soon. Let me pull up the weekly chart here. And let's see how far back I can go. Can I zoom this out? All right, I can't zoom it out that far, unfortunately. But yeah, I can't get this back far enough. This is 2020. But this is a good example so here's 2020, okay? When and this was interesting. So in 2020, gold was rising. In March, remember the March of the pandemic, and we saw the stock market crash? In March and April, gold crashed as well. In March, gold crashed as well. But then in April, when the Fed started dumping a lot of money and the Fed started helping out the market, we saw gold skyrocket to its highest level, going all the way through August of 2020. So I don't know. We may be in this area of panic right before we get a massive rally. So it's possible that these last 3 weeks are literally a buying opportunity. We kind of have a little bit of an upward trend, bottoming out around right here. It's possible we may be entering a massive buying opportunity on gold. I can't really speak to why it is not rising right now, but like I said, could be a buying opportunity, but I don't know. We'll see. Let's see. Okay, good question. What is a 0% Fibonacci retracement level? In technical analysis, when you're trying to figure out how, crap, I just moved it. I'm never going to get back. Anyway, about right there. In technical analysis, when you're trying to figure out how much a stock might rebound off lows, you go from a high to a low. So a Fibonacci retracement level basically goes from the high, which was up here on November 22nd, all the way down to the low, which was March 14th. And then we will see bounces and rebounds off of these levels. So we saw a real strong rebound off 61.8%. We saw a more strong resistance support at 38.2%, and then more really strong support at 23.6%. And that's kind of how these Fibonacci retracement levels work. Essentially, it's a mathematical formula. So the 0% Fibonacci retracement level was the March lows. So we're essentially back above the March lows, pointing to a rebound in the markets. So good question. By the way, if you want to know more about that, I do explain that in the VIP Discord. I have an entire coaching session that you can go watch that explains Fibonacci retracement levels. And you can go into great detail and go to that coaching session and learn all about Fibonacci retracement levels. Richard, thank you so much for being a VIP Discord member. I know you're making money. I've seen you in there. Let's see. Tim, thank you so much for being a VIP member. I know you're making money. I've seen you in the Discord as well. Great to see you guys here on the video today. Okay, Apple. Let's go talk about Apple. We haven't talked about that guy yet. AAPL. All right. Apple had really good earnings. The only reason they dropped is because the overall market dropped. Again, we have a nice hammer here. That is a weak technical indicator that points to a rebound. And also, Apple has a pretty good history of bouncing off of the 100-day EMA, or actually just below the 100-day EMA. And then it also has stronger history outside of a recession, bouncing off of or just below the 200-day EMA, kind of halfway between 200 and 300-day EMA. And if we look at where we are right now, we had a bounce over here between the 200 and 300-day EMA. And we're at that level again, right between the 200 and 300-day EMA. So historically and technically, it looks like Apple's ready to bounce and go up. And with Apple being the largest company in the market, if Apple rebounds and goes up, it's going to bring the whole market up with it. So again, another sign that we're at the bottom and we're going to rebound and go up. So that's Apple's definitely, absolutely short-term bullish. Long-term, forward PE is only 25. This is one of the reasons we haven't seen Apple tank like Amazon and Tesla and a lot of the other stocks, Netflix, you name it. Apple's holding its own weight because it's not extremely overbought like a lot of other companies are. It's only mildly overbought. So Apple might only drop maybe, I don't know, 5-10% from here. It's a much, much, much better stock, value wise, than a stock like Amazon or Tesla. So Apple is bullish in the short term, and I'd say neutral to mildly bearish in the long term. I actually like Apple still as the long term play. I think this would be a good stock to DCA into, dollar cost average into, if you're interested in Apple. All right. How high do I think QQQ will get before hitting resistance? I have no idea. No idea at all. What I'm going to do is, if we do get a rebound, I'm going to move my Fibonacci. Actually, I'll just do that here while I have you guys on live videos. So you can see how I do this. I'm going to pop that guy over to the top. We're going to move my 0% down to the new level, if I can get it. Come here. We're going to move this guy, come on, down to the new level right there. So now we're going to look for some rebounds. And typically we will get, if we rebound, we get up to 50%. In some cases, we'll get up to 61.8. So somewhere between $359 and $370 if we get a rebound. We should top out somewhere between $359 and $370 before continuing downward. That's just based upon the Fibonacci retracement level. It's going to how you do some technical analysis there. You're right, but you might also be late to the game. Most real estate stocks are down massively, and they're all at 52-week lows already. Keep in mind the stock market is forward-looking. Let's see, Tesla, Amazon, we already talked about all those. Any others? Okay, let's talk about NEO. I actually looked at this one today. So NEO's in an interesting situation here. We still have a lot of FUD surrounding China. More importantly, far more importantly, the Chinese economy is suffering right now. It is contracting. Now, China doesn't really go into recessions because the Chinese government they have a policy that if they're about to go into a recession, the government itself will spend money to keep the country out of a recession. So I don't see China going into a recession. But they're contracting to the point that it's getting really bad in China, really bad. So I think this is really going to hurt NEO from a fundamental standpoint. Now, technically, NEO's bullish, right? It's about to get a golden cross on the MACD. The RSI is rising. If you look at the technicals, it is short-term bullish. I think NEO's probably going to participate in a rally that we get over the next week or two, go up to $22.25. But after that, I think the fundamentals are going to kick in and NEO's going to continue to drop. I looked at this one today. I ended up not opening a position on it. I opened up positions on stocks that were already what I was looking for today was stocks that were rising as the market was falling. Okay, that's how I chose my stocks. So, what did I buy today? I gotta pull up the account. I don't even know what I bought today. We bought Qualcomm. So let's show you that chart real fast. Show you why. So Qualcomm rose as the overall market went down. That's why I opened up that one. PayPal, same thing. PayPal rose. It was up at 4%. It was up as the market was going down today. Again, about to have a golden cross on the MACD. Microsoft, we opened that one today. And the same thing in Microsoft. It was rising as the market was going down. We actually did get a golden cross on the MACD. What else? And then I guess Facebook was the last one, or Meta. That also was rising as the market was down. And again, we got a golden cross on the MACD. So I opened bullish positions on stocks that were bullish as the market was red today. And that's really what I was looking for. Uh, let's see what else we got. Do I pay attention to Ellie Wave? No. So to give you guys a little bit more insight on me personally, the last company I worked for prior to doing YouTube full time was an algo trading company. And one of the major projects we were working on when I left was getting Elliott Waves on board and getting the whole Elliott Wave team onboarded with our software so that people could algo trade the Elliott Waves. Now, this is why I absolutely do not believe in Elliott Waves at all. We had a saying at the last company I worked for that you could ask 10 Elliott Wave traders what an Elliott Wave meant, and you will get 15 different answers. I'm not joking. Nobody who does Elliott Wave trading could agree upon what the Elliott Wave actually meant as far as what a stock was going to do. And for that reason, I do not use Elliott Waves because Elliott Wave traders themselves cannot agree upon what an Elliott Wave is. So, yeah. Vincat, I apologize if I'm not saying your name right, but congratulations on profiting with us today on the QQQs. Really happy to see you guys profitable. Let's see. Again, guys, if you guys want to profit with us, come join the VIP Discord, stockcurry.vip/VIP. Let's see. Good question. So QQQ, SPY, Amazon Leap put options 2 years out. I don't think I would do QQQ or SPY. Well, maybe QQQ. Amazon, yeah, that might work. I maybe do Tesla as well. I'd say QQQ, Amazon, Tesla. Those are the ones that might work for 2-year Leap put options. Again, this is not financial advice. Nothing I say should be construed as investment advice. I'm not telling you what to buy, sell, or trade. I'm just telling you what I would do. Let me be very clear about that. Nobody's trying to get sued over here. By the way, everybody making money in the VIP Discord, they're just following my trades, all right, and getting coaching on like how to do technical analysis and how to actually trade these multi-leg options and things like that. Look, I'm not buying cryptocurrencies right now. Cryptocurrencies tend to follow the overall market, but exponentially so. So as the market goes down, cryptocurrencies go down even more. I'm not touching cryptocurrencies right now. All right, guys, we only have 2 minutes left. Trying to get through these 2 minutes left. What else do I want to say? Guys, in the last 2 minutes, if you haven't done it already, please hit that like button. Subscribe if you haven't already. Thank you, guys. If you're on Twitter, follow the page here. So it's not a page. What is it? A profile? Follow the profile. Good question. I tend not to change them until we have a rebound and we've clearly hit a new low. What else we got? What else we got? Thank you. You're very welcome. Thank you guys so much for your kind words. I really, really appreciate you guys. Really appreciate you guys. 1 minute left. Let's see. Yeah, I think that's going to wrap it up. Thank you guys so much for joining us today. That's going to wrap up today's video. I hope you guys have a lot of success trading. I really, really do. If you guys want more from me, you can go follow, not that one. That's my Twitter, by the way, guys. If you guys want to follow me on Twitter, twitter.com/realscottcurry. This is what I was trying to click on. If you guys want to follow the new YouTube channel, it's youtube.com/realscottcurry. I plan to do a bunch of personal finance stuff over there. There's more general investing, buying real estate, entrepreneurship, making more money, side hustles, all that sort of stuff. So come follow me at the new YouTube channel. I hope you guys have a lot of success trading. I will see you guys tomorrow. Thank you